Let's go over how you record the purchase of more than one item for one lump sum price. It's called a lump sum or basket purchase. So we have this example here where Microsoft is purchasing land, building and equipment all for $90,000, and in exchange is going to issue a note. Well, we can't just have all the assets lumped together at $90,000, the cost. We have to actually split it out. And the reason we have to split it out is that land doesn't depreciate where the others depreciate, and we need to split them out because the building's depreciation will differ from the equipment, because the useful life of a building tends to be longer than equipment. So how do you go about splitting it? Well, what the company needs to do is get the fair values of each of the individual items if they bought them single, alone. And so I'm given, or you will be given, the fair market values, and here they are for the three items. So what we're going to do is allocate the cost, the $90,000 that you're paying, or in essence paying when you issue a note. So how do you split it up? Well, we're going to take the proportion of each of these items as a total of their total fair values. So if you take a look here, our land is 50, building 40, 10 equipment. So it's worth $100,000 in total as far as fair value. So basically then what you're going to do is take the percent. So for the land, you're going to take the 50,000 divided by the 100,000 to get a proportion, and that's the 50% that we're going to use to allocate the cost. So the total cost again was $90,000. So 50% of that, we'd have $45,000 go to the land. The building is $40,000 of the total fair value of $100,000, or 40%. So of the $90,000, we're going to multiply by 40% and get $36,000. Lastly, the rest of it goes to the land, or you can do it this way: 10,000 divided by the 100 and get the 10%, and multiply that again by the 90,000 total cost to get the proportion that should go to the equipment. Sorry. So to record that, you're going to debit your land, your building, and your equipment for the amounts that you got here, which, by the way, all total 90,000. So again, the land we have 45,000, the building 36, and lastly the equipment 49. What we exchanged for those items is a note payable. So we'll credit what we give, and we're giving a note. So notice again that we're recording at cost, not the fair value of 100,000, and that's because you can't record a gain. So there's no gains on purchases. Now, there's nothing to prevent the company from turning around and selling these individually and potentially getting 100,000 for what they paid only 90 for. Then they can record a gain. That will be discussed later.